Do your rules ever lose edge?
No, because this would mean that the way how the market works changed 180 degrees. The market, since it's existent, works the same way. The mechanics of the market never change. If they lost edge, the market would change fundamentally.
And is that because your rules are based on... In this episode of the Way of The CPT, Consistently Profitable Trader, we have Bernd Skorupinski, who is managing over $3 million in prop firm capital. He has over 175K in verified payouts from FTMO alone, and he dominated the leaderboard as number 1 for 3 consecutive months. He is the owner of the online trading campus with over 10 years of experience. Bernd shares his 2-step approach to trading the markets, how he trades prop firm challenges and gets consistent payouts, his thoughts on scalping, and a lot more things that we should take notes on. Without further ado, let's talk to Bernd. Welcome to another podcast. We are here in Dubai with Bernd Skorupinski.
Correct, perfect. Yeah, appreciate it.
Yeah. So it's an honor to meet you. Thanks for joining and being the second guest on the podcast. You know, I first saw you on YouTube after seeing your successes with FTMO, and I figured that prop traders have a lot to learn from you. I have a lot to learn from you, and I'm sure you have a lot to share. Thanks for accepting my invitation.
Well, honestly speaking, thank you for the invite. I told you yesterday, really appreciate it, and I feel honored because you have nothing to gain from that. Your following base, especially on YouTube, is much bigger than mine, so really appreciate it. I feel honored, so thank you for the invite.
Yeah, no, we have a lot to gain from you. Because the podcast, it's designed to bring real traders, real professionals to the forefront so that students that are out there, or traders that are out there that are looking for high quality education, high quality mentorship, they can find it. Because when I started, it was hard for me to shuffle through all of the marketing and to find real professionals. It's my honor, really.
Yeah, I mean, for the people out there, it's like finding the needle in the haystack, right? By all the information out there, it's really hard to dig through what is real and what is just like marketing, as you say, right?
Definitely. So I just want to allow people to get to know you. Who's Bernd? Can you tell us a little bit about where you're from, about your upbringing?
Yes, absolutely. So I moved to Dubai 13 years back. Originally, you might hear it from my accent, I'm from Germany. I'm not native English, so I'm from Germany. I moved to Dubai 13 years ago. I had a normal corporate job in the very beginning. Then early on when I moved to Dubai, I ventured into trading. I became eventually a full-time trader, and now a full-time trader for 10 years. So I'm trading full-time, providing for my family since now 10 years. During that time, it was in 2019, we established a licensed investment consultancy here in Dubai. So we are licensed and regulated by the UAE government authority. That's always very important to mention. So I'm not another dude on social media who offers a Telegram group and some dumb signals, right? We are licensed to do what we do here in Dubai, and we focus actually on tangible and practical trading education with our licensed investment consultancy.
There's some people that say, if you're a successful trader, why do you need to provide education? This is a question that...
Oh, I love that question.
Yeah, I want to hear your thoughts on that question.
I love that question. Well, I understand, first of all, that people are critical because of the trading space, right? And in the trading space in general, there's no regulation. Everyone can offer trading education because there's no system around that kind of proves or gives you that kind of license, right?
Right.
Nobody would question a doctor who teaches in a medical school, university, hey, why, if you're such a prestige brain surgeon, why are you going to medical school and, teach your craft? Or a lawyer, why are you going to law school and teach people how to become a lawyer, right? Nobody is teaching these professions because they are licensed what they're doing. Yeah. But when it comes to the trading space, everybody can, go in front of a camera and teaching you about, how to trade the markets because there's no kind of licensing field. That's the problem. That's why I initially started with prop trading, right? To get like this kind of certificates and showcase credibility to be the needle in the haystack. That's why initially I went there. I was like, oh, this makes sense if I get all these certificates and show that I have payout proofs and stuff. I'm better than others, I know whatever I talk about has some weight, right? And on top, it's about, for me, as I said, the way how I trade. And I mean that the way I say. I don't need more than 30 minutes per day, maximum, right? 15 to 30 minutes, right? Going through the market, I have my setups ready, place them. It's just like, really, I don't need a lot of time. It's really also then to build a legacy and to do something on top. It's quite interesting because I can tell out of experience, maybe I have time to tell the story because it's really interesting. People also told me or asked me, hey, why don't you lie on the beach the whole day, and why do you do so many other things on the side, like the investment consultancy, the trading school, and so on? Why are you bothered with all of that? I've been there. After I quit my job, I was so happy that I have this freedom, and I was like on the beach every day, another beach bar. I think I removed these pictures from my Instagram, but I had like every day a different beach bar. But I was all by myself because my friends were working. I was like, you know what I mean? Like,
yeah.
But in the beginning, I felt cool and proud that I can, accomplish that kind of lifestyle.
Yeah.
But I have to say, after 6 months of going through that lifestyle, it's boring as fuck.
Yeah. Yeah.
And you feel useless.
Useless.
You feel useless. That academy, school, however you want to call it, that gives me a purpose.
Yeah, to help others.
And the purpose aspect is really important to me, because trading by itself doesn't take a lot of time. It's not a time requirement. I'm doing a lot of sports. I'm going to the gym.
You seem very fit.
I'm going to the gym every day. I'm taking care of everything, but this gives me additional purpose. It's great, know.
So how does fitness help you with trading? Or is it the discipline? Or
it's everything, right? You can translate so much from the gym to kind of, let's call it business attitude in general, because all the business traits you need for trading as well, like being disciplined, showing up, the commitment, the consistency to build muscle. It's also translatable to like trading. It takes time. There's no overnight success. And then you have the people who have these New Year's resolution, who sign up on the first, right? In January, I think you have the highest sign up dates when it comes to sign up rates, when it comes to gym memberships, because everybody has these New Year's resolutions, but then they never show up.
Yeah.
Right?
Yeah.
And it's the same with trading. You have to show up. It's not about the notion that you would. Why do people start trading? I started trading because I needed change. Right? People start trading usually because they have pain. Let's face it. I had pain.
Yeah.
Right?
Yeah.
My pain was the corporate life. I hated it so much. Yeah. Your reasons might be different as well.
Yeah,
but
same.
You see, but everybody who starts has some pain, or wants to change at least something in their life. That's what trading can provide. But then it's not just about the notion of changing. It's same with like body composure, right? It's like not like, you're overweight and you want to change. Well, you have to show up. It's a long-lasting process. You cannot wake up the next day and be like a fitness model, right?
Yeah.
It takes time, right? And the same with trading. It's not about the notion you have to show up.
How did you actually decide to move to Dubai?
Well, I had quite, I would say, very traditional childhood, growing up in a village. As I said, very, very traditional, just normal, I would say, school career. However, at some point I decided I have to break out from that kind of narrow-minded village type of thinking and from that traditional way of life. So I actually moved to the US for quite some time, to California. I studied at the UCSB, University of California in Santa Barbara. And this was like, shaped me a lot to get like more open-minded about cultures, different places.
Yeah.
It was back in 2004, I had a family vacation here in Dubai. It was like my parents, my siblings and myself. And we just like, I think 14 days vacation. And I don't know why, it was 2004, there was nothing here, only desert, right? There was only no downtown, no Burj Khalifa, only the Burj Dubai. It was just being built. It was nothing there.
So you were here, like those pictures that I see when it shows Dubai with the desert.
Only a few buildings, kind of. I've seen a lot of that, right?
Okay.
But for some reason, I felt like I never knew what to do with my life, like really never. But I felt like back then already, I don't know what I want to do, but I want to move to Dubai. Seriously, that's how it was.
Yeah.
Call it destiny, call it whatever you want.
Yeah, it must be.
But yes, and then I was always like working towards that goal to come to Dubai, still not knowing what I will become.
Yeah. So when you
what I will
studied at
turn
the
into.
university, I think you mentioned that you studied
Just
like Middle
business,
East.
yeah, business was focused in Middle East. So just normal business education, right? Because with business education, you can do everything.
Yeah. So that exposure though with your parents to Dubai is what gave you the interest to move to the Middle East.
Kind
right?
of.
To move,
I think at least.
Yeah.
I'm not 100% sure what really led me to decide that I just want to be here, no matter what. But yes, that's what happened.
Okay. So then how did you transition into trading? So you mentioned working a corporate job.
Yes.
Right. So after the university, you were hired in Dubai.
Maybe I have to mention that I'm coming from an entrepreneurial family. So we have back home in Germany, we have a hotel, restaurant business. So hospitality basically. But also I never really liked hospitality. I hated to smile all day long, to be nice to guests. It's not my personality.
Yeah.
So I'm not a fan of hospitality. So I never wanted to kind of take over hospitality.
Yeah.
But I think I have that entrepreneurial
But you have the entrepreneurial spirit
in me, in my DNA, I would say, I guess. And so I moved to Dubai, got a normal corporate job outside hospitality, actually in the automotive sector. And I kind of also realized pretty quickly that corporate is really political.
Yeah.
It's you're basically a slave to your desk, and that 9 to, let's call it, it sounds cliche, but back then that I would call it that 9 to 5 grind.
Yeah.
Right. I couldn't relate to it.
Yeah. That golden cage.
Yeah.
Right. Especially if you have the entrepreneurial spirit.
The red race, right?
Yeah.
Like being in that red race.
Yeah.
Really, when I was thinking about, can I do this my whole life? Am I going to be happy my whole life being in that red race? I was clearly saying no.
Yeah. Yeah. So then who came along and exposed trading to you, or how were you exposed to trading from there?
Well, I can say now back then, right? Because I've started a long time ago compared to most probably all your viewers or people who are going to view that podcast. Back then, the trading environment was a little bit different, right? It was not there was not so much social media or YouTube exposure whatsoever, right? It was more like physical education, so to say, right? To find a place where you can physically go and learn. So I was kind of just curious and interested about trading in general, about the financial market, to kind of say, hey, you're making good money in Dubai in your corporate job. Everything is tax-free. So it's like, and back then, I was not a big spender, just like, saving money. And I was like, okay, what to do with that money, right? Like, how do I make it grow, right?
Yeah.
Kind of make money work for you, and not the other way around.
Right.
Yeah. And I was really curious about that general idea. Not to say immediately, hey, I want to go full-time into trading and leave corporate behind. No, my initial thought was, I have money in the bank. What can I do to make it grow without me doing a lot?
Yeah.
Right?
Yeah.
But I also come from an educational background, right? Study, university, college, that I was saying to myself, don't just do it yourself, get some education.
Yeah, very important.
I think it's a different mindset where people nowadays, they just like jump into it by themselves and let's figure it out somehow, right? Where somebody else with like a different mindset says, let's get some proper education first and see how it goes before I put my money on the line.
Yeah, that's important. A lot of people are maybe demo trading for 5 days or so and then going
maximum.
live. Right. Maybe. Yeah, my first.
If any day.
My first mentor, he's like, you should stay in the demo. And I'm like, no, I mean, I'm an engineer and I've been successful at everything I've done. So I'm going live, and I lost $5,000 just like that.
Yes. I mean, it's a fine line, right? But you can always go live, but then, you don't trade with like big money, that money that hurts when you lose, because in the beginning, sorry to say, but eventually you're going to lose, right? It's part of the learning process.
Yeah.
But I mean, you should always start demo, as you said, and then you go live, but very small amounts that doesn't hurt your wallet. That you can still sleep at night.
Yeah, right. So so you were working corporate.
Yes.
Okay. You had the entrepreneurial spirit.
Yes.
The golden cage is what I call it. You're making good money, but you say, okay, I can't do this forever, right? What markets attracted you?
I actually had no freaking idea.
Yeah.
Like seriously, I was kind of even naive. Sorry for my language. I didn't know shit back then, really.
Yeah.
And I was really naive to say I'm interested in stocks. Okay. Because back then, well, CFDs were not so big back then, right? And then I was exposed to, I didn't even know about FX back then, or even futures. Like, what does futures even mean? I didn't even know this existed. That's how newbie I was, like blank sheet. But I think also on the other side, it helped me because I came into trading and into the education space as a blank sheet without having any bad habits.
Yeah. That's important.
No bad habits at all.
Yeah.
We all develop bad habits throughout our career, but it's great. It was great, I think, that I came into that business without bad habits. So when I came to that education space where I started to learn trading, I was like, I want to learn stocks. And they were telling me, hey, do you know about FX or futures? These are nice trading vehicles as well. No, just stocks. Because I was, very naive, right? And then I started eventually with stocks. Pretty quickly, I realized during these stock sessions that I had that I was slowly exposed to other assets. Why would I trade stocks if I can trade leveraged markets? Like leverage was a new term back then for me as well. Imagine this was 2012, 2013, right? Where all that trading was different compared to now. And I was like, wow, all these leveraged markets, why would you trade stocks where you need so much capital if you can trade leveraged markets that are open 24/5, right? No need for stocks. Stocks are stupid. Now I was going into futures. Okay. And then this is where I really learned trading. And I was in the very early years, I was only trading real futures at the CME, basically, Chicago Mercantile Exchange. Okay. Right?
Yeah. So you mentioned like personalized education or physical education. So you actually learned sitting with the mentor, looking at the screen with the mentor.
Exactly.
I don't think
one-to-one.
One-to-one. Yeah. I think most traders out there, they don't have this type of experience. Like, what was the benefit of having a mentor?
Well, what I realized is that there's no one size fits all when it comes to education because everyone has a different background, everyone has different requirements, different needs, different personality, and personality plays a big role when it comes to trading as well. So I think personalized trading education is really important as well. Because even if you have very good example, my brother trades as well, right? And we basically almost trade the same strategy, or we trade the same strategy. But within that framework of rules that we have, it's still personality plays a big role because I might be a little bit more aggressive when it comes to entry, or he might be a little bit more conservative, right? It's like there's no one size fits all.
That makes sense. So you start with your mentor. How much money do you start with, like your first investment, and then how did it grow?
Well, I remember my very first trade. It was in the futures market. I traded natural gas. I think it was a natural gas short, 60-minute time frame, 120-minute time. Because I printed it out and sticked it to my whiteboard because I was really proud. I think it was a 1 to 2 or so. I made $468 something. Okay. I still remember because it was my very first live trade, and it was profitable, of course. And down the road, a couple of losers as well. But it was like the first trade was a profitable trade on natural gas futures, and this was a short. So I still remember it. Yeah. Okay,
so I think a lot of traders out there may be thinking about how much they should initially invest. You know, what was your initial investment?
The environment back then was completely different. You cannot compare it to today, right? Today, I would say, you don't have to invest anything because they're the prop firms, but we can get into prop firm later on. Back then, you needed capital. You need money to make money eventually, right? So, and I was trading futures, so still this was a leveraged market, but not as much leveraged as the FX or CFD market. So back then, I would say I think I had a $20,000 account or so.
Yeah. So before props, what was your best trade? Do you remember what was the best trade that was like, man, this is I got it, man. This is it. You don't remember?
No, I think I never had like a crazy outlier.
Okay.
It was it was very consistent. I'm not an engineer, but I think I have that engineer mindset where I'm like really process-based,
methodical.
Very important to me, right? Everything on a piece of paper, follow kind of a checklist and sticking to it and not like moving away from it. So I never had like the big like gain that, okay, because of that gain, I can quit my job now.
Yeah.
So it was, no.
Okay.
What happens maybe nowadays with all the crypto stuff, and like when people get like the 100x, okay, now I quit everything. No, it was very, very, very just consistent in that 1 to 2 to 1 to 8 risk to reward range, right? Consistently, and this is what made me profitable.
Okay, so did you have a worse trade?
Well, there's some nice anecdotal stories about like, I was trading every day. I started learning day trading, right? I tried to keep it short, but I had a surgery back then and nothing major, just a surgery, but, and I got back home from that surgery and was full of drugs, right? Painkillers and stuff like that. But to distract myself, you can imagine what happened. I went to the PC, switched on, trade. Actually, it was a gold trade, right?
Okay.
And I don't know how this happened. I actually, instead of canceling the trade, I was not filled yet. It was set and forget, basically. I pre-planned the trade, placed it, right? But then I think I wanted to cancel it. But actually what I did, I just removed the stop loss. I didn't cancel the trade, I just canceled the stop loss. I remember that because then I went to bed because full of pain. I slept 4 hours. When I woke up and checked on my mobile or back on the PC, I can't remember. I was down like, I don't know, $4,000 or $5,000. And back then it was like, because I just started off.
Yeah,
right? It was pretty much
I
think it was in the first year or so. I was like shocked, right? How did this happen? How am I even filled, right? And then I just closed it manually, just like it. But so
how'd that change you? Like, how did that loss change your career? What did you learn from it?
It's like, in general, what I learned, especially when it comes to trading, that you have to be kind of mentally stable, mentally clear, and be really sharp. And if you have don't compensate trading with like things that go bad during a day. When you have like go to the office or go to school and you have a bad day, don't try to compensate anything with trading because usually these days are the worst, right? So
yeah, man. That's important. So we'll talk about routine and process, right? But you mentioned that you went from corporate to trading. How was that transition? Like, how long were you trading before you decided to quit your job?
Rather quickly, to be honest. It was like within a time frame of a little bit more than a year. But I was really, during that year, I have to say, I don't remember a day where I didn't like practice, where I didn't study, where I didn't trade. I was like fully committed.
Yeah.
Right. And I had a mentor as well.
I was going to ask, do you think the mentorship helped you?
Really intense mentoring program as well back then.
In person.
In person as well.
Yeah, that's
right?
pretty intense.
I think people don't understand the benefit of a mentor.
Yeah.
Right? Because you can make progress so much faster. You cannot even compare it. I'm not sure about your experience, but having that, trying to do it yourself or just from a dumb online course, so to say, versus somebody who really knows their craft and then teaching you personally, like it's day and night.
Yeah.
You cannot compare it.
Yeah, definitely. Yeah. In my professional life, I've learned that one of the best investments is my own education. So I think having a mentor has helped me cut down the learning curve as a trader. And it sounds like, it helped you out as well.
I want to stress, I invested $50,000 in my mentoring.
I've invested about $20,000.
Yes, so that is not cheap.
But you see where it helped you. I mean, within a year, you were able to quit your job.
Yes.
Now, how, was your family supportive of you? Did you have family at that time when you?
Yes, it was like a very stressful time because I got married. My daughter was born, or like on the way, basically. A lot of
pregnant. Wife was pregnant.
A lot of transitions, right?
Yeah.
But I think also it's really important that your family is supportive. Yeah. So I can, right? My family was, my wife especially, super supportive, right? This is the most important thing, right?
Yeah.
So I can't really remember, but I never felt negative pressure, more like positive pressure, looking forward to do something new, to basically get out of that rat race. It was like all positive.
Yeah.
It was all positive.
Man,
I
that's
never
great.
had this negative feeling like people have nowadays, that I realized that, can I make it? Or like, yeah, it's like all these doubts.
Yeah. So
I never had doubt.
You never had the doubt. So
Never.
Your wife was supportive. You must have had like some money or some cushion, maybe.
Well, yes. That's what I also teach today, that I said you need to have like at least 1 year of safety net in your bank account. Don't try to live from paycheck to paycheck, because that money pressure is something you cannot disregard when it comes to, hey, you cannot trade on paycheck to paycheck, cannot have that trading life. This is too much pressure. Trading it by itself is already a lot of mental pressure, right? So to master that mental game is already difficult enough. If you have that paycheck to paycheck pressure, I can almost guarantee you it's not going to work.
So would you advise that someone that's getting into trading first establish their like consistent income outside of trading, and so that they can have
a stable life,
pressure, have a stable life. Yeah, have stability.
I think that's the key: stability, stable life. Everything has to be sorted. Again, trading cannot be an excuse for being or making bad decisions your whole life, and then, hey, finding a way out of that, kind of digging yourself into a hole. How to do it? Oh, I get into trading, easy, quote unquote, making easy money, and try to get this 100x, 1000x move, and then I'm like, I solved all my issues.
Yeah.
Trading is not for that.
Yeah. So the characteristics that makes a successful trader, they have to be built like maybe outside of trading. And so it's things that are related to life.
100%.
Principles that are related to life. Having a routine.
Discipline, commitment,
drive. Yeah.
All this, like, that sounds cliche, all that stuff that sounds cliche, but you need to have that. Otherwise, you're not going to make it in the long run. Can you have a lucky winner? Can you have a lucky shot? Yes, obviously, but consistently making profits, no way. If you don't have these key traits that we just talked about, no way.
So we'll get into prop trading. Just one last question for you here.
Yeah.
So if you were building a trader, right? If you were building a CPT, consistently profitable trader, right? What would maybe be like the 5 characteristics that this trader would have to, that you would look to this trader to have, right?
I don't know about 5, but it's definitely like you have to be able to follow rules, right? If you cannot follow rules, some people cannot follow rules, right? You're not gonna make it, right? Dedication, commitment, because it's a slow grind. It's a marathon, not a sprint. Yes, this sounds all like cliche, and you might have heard that 1 million times, but that's the reality.
That's the reality.
Right? That's the reality. There's no like from zero to hero. It doesn't work that way. It's like ultimately everything boils down to one thing. You have to have that business attitude, that entrepreneurial mindset.
Yeah.
Because even if you start with a small account, you're starting your own business. In this case, it's a virtual business. It's a trading business. It's like a startup. So you have to do everything basically the same way like you would start any other business, right? And you need the same traits. And if you don't have these traits to start your own business, if you're not made to start your own business, it's not about good person, bad person, right? Some people are just not made to start their own business. They like that safe, quote unquote, perceived safety net of the corporate world.
Yeah.
And that's fully okay.
That's okay.
That's fully okay. But some people are made for something different, right? You have to make sure you are made for this. You have to have this business attitude. And then I think bringing the same attributes, the same traits into that game, and then you can also make it in trading. Because trading is just another profession.
Yeah, it's another profession.
It's like if you're a doctor, engineer, if you're like a lawyer, a pilot, a construction worker, it's just another profession that you have to learn from the scratch.
Yeah. One day, I don't know, a light bulb came on, and I realized that I was treating trading like a hobby. And I said, I'm a professional. I know how to be professional. I know how to run a business. So I need to treat trading as a business. But I think the way that it was marketed to me, like trading on the beach or just, trading in the bed. You see people like just kind of, I made $10,000 on the airplane.
Marketing. Yes,
So,
that's the marketing.
Yeah, I think a lot of people kind of come into trading with low expectations of how much input they have to put in.
That's true. I would sign that.
So you highlighting that you have to run it as a business.
Run it as a business.
Is very important, and we
important. And if you don't have that mindset, or if you don't have that characteristics of an entrepreneur, then just don't do it. Find other ways, right?
Yeah.
I mean, but that's another profession. If you're not down to learn a new profession and start from the scratch, also go through the bad days. That's how.
So for those people that say trading is easy, what do you think about that statement? Like, trading is easy, you can make money easily.
Well, I don't like the word easy, but I like the word simple.
Okay.
It's a big difference, right? Because no profession is easy. It might look easy, right? But it's definitely not easy. But it's simple. It's simple in a way that eventually you need to have your set of rules. It's like a process-based. You follow that set of rules, that checklist kind of, whether this checklist is on a piece of paper, in a Word document, in your mind. You follow that checklist, and basically then you place your set. It's simple money because it just doesn't require any physical work, right? It's less, everything is virtual, right? You just place it on your computer. Placing the trade itself, it takes you 30 seconds, a minute, if you have to do the position size calculating as well. But it takes you less than a minute. That's why it's simple. Yeah,
that's why it's simple. So now let's get into prop firms.
Yes.
Okay. A lot of the viewers on the channel want to get funded. They may be funded. They want to scale their accounts. So let's talk about like how you first got into prop firm. How did you start? After this 9-year career in trading, how did you start with props?
Well, also just by coincidence, I was introduced by a potential business partner back then. It was, last year, right? Not back then, but last year, where he said, hey, you have to have a look into FTMO. That's what he mentioned, FTMO. And then I was asking, what is FTMO? And he said, it's a prop firm. And I was also reluctant to look into prop firms because I was first introduced into prop firms 2015, 2016. And also back then, the environment was completely different. There were like a handful of prop firms, mostly futures prop firms. They were like proper day trading prop firms. You were able to trade a handful of products. You were only allowed to hold positions for one day, not even throughout the weekend, just like for one day. You had to close it on the same day. And the rules were ridiculous. So I was like looking into that back then. I was like, no way, this is just nonsense, right? You cannot be with these rules.
Yeah.
And I was like, never looked back into prop firms again. And then this guy introduced me to it, and I was still reluctant to look into it. But then he somehow made me to look into it because he was mentioning it all, like constantly look into FTMO, look into FTMO. And then I was looking into it, and I was looking at the website, going through the rules, and I was like, okay, this makes sense. Oh, this also makes sense. Oh, you can trade CFDs nowadays. You can hold even over the weekend. You have like no real limitations. Because for me, it's important that my trading style that I do with my personal account, I can easily transfer into the prop trading world. And I don't have any kind of limitations. Once I have one single limitation, I would not do it.
Yeah.
So, and then I realized I don't have any limitations, so give it a try. And this is where things start rolling.
Okay. So it looks like you had an instant success with props. Almost.
It was instant, yes.
Yeah.
But considering all my experience beforehand, right? I was not a newbie. I was just like, okay, let's buy the first challenge. Let's try how it goes. 200K. Passed it, verification passed it. Oh, I can even max it up. I can do another one. I was like, oh, cool. Do it again. Was max allocated, and then going from there.
I've talked to traders that have a creative approach. Like they look at a batch of accounts and they sort of trade each one aggressively to get to the funded stage. But I think your approach is a lot different. Can you elaborate on your process?
Yeah, it's pretty, simplistic, right? Okay. I've tried different approaches just as a kind of, for me, as a case study that any approach that I'm trying to do works, right? But the best approach for challenges and verifications in general, I find, is that kind of 2% risk per trade with a 1-to-1 risk to reward ratio. So on challenges, you need like 10%, 8%, right? Let's say 10. And then you need like 5 winners with 2% risk, 1-to-1. And you passed basically the challenge, right? And this is the approach.
Do you change when you go to phase 2?
When I first started to do my challenges, I changed to, I think, 1%.
Okay.
But
1%,
now
1-to-1?
1%, 1-to-1, because you only need 5%, right? And you have like, nowadays, what is more like industry standard, they remove all these trading day period, right? Now even FTMO removed it, right? But when I was doing my first challenges, it was like 30 days in the challenge and 60 days in the verification stage.
So how would you approach it now with the unlimited days? Would it be different?
For me now, because I have so much confidence and I'm just doing it the same way, right? 2% also in the verification. I have so much confidence, and I've done also these live trading YouTube challenge documentaries. I don't know if you've seen it, where I record every day and, show the people every day like what trades I took the day before, and how and it's just like, for me now, it's actually it's fun. I see these kind of challenges and verification it's almost like a competition. And I'm a very, in general, competitive person. So I like competition, so it's like kind of fun, in a way.
So you were on the leaderboard like 3 consecutive months.
Yes.
Was that design? Right. Was that okay? I'm gonna make it to number 1, or did you just step in as an experienced trader and you hit number 1? It just happened.
I never like this. I really didn't care. It was cool, of course, right?
Or did you maybe you hit number 1 month and you said, hey, how about I do this
maybe
again?
Subconsciously as well. I was subconsciously, definitely. But I'm not like super intentionally. It was just like taking the trades during that time that I was not taking more risk just to stay on the top or something like this, right?
You weren't taking more risk.
No, I didn't do any stupid things just to be in that top 1 leaderboard, right? I didn't just taking the trades that I took anyway, right? With a normal risk profile.
This is interesting because, you can see traders that may be like one-hit wonders. Maybe they get a funded account, they go to the leaderboard, and some of the prop firms, you can see the trades that they take. Just one trade, 20%.
I don't even know
16%,
that. You
right?
can see the trades.
But it's interesting that you already have been trading for 9 years, meaning that you've developed a playbook, the psychology needed, the
Very
mindset,
yes.
the risk management. You developed the execution that you needed. I think about this formula: input times leverage equals outcome. The leverage is the prop firm account.
Yes.
And then the input is that 9+ years of experience.
Yes.
Hard work, process, routine, etc. Skill. You have the skill.
Yes.
And then the outcome was over 175K, the FTMO alone, leaderboard, etc. Right. So I think I want to hear about what was going on, what did you trade? But the skill is something that we'll get into a little bit more, show the audience how much you actually put into the craft. How many hours a day did you study? Did you study on the weekends and things like that? What kind of process do you have when it comes to just building the skill? Besides the mentorship is a very important aspect, but then like Kobe Bryant or Michael Jordan, these figures, they have the top trainers, but they have to put in the work.
That's if I can just elaborate and jump in here, because this is so important. You can have the best mentor in the world. You can have the best strategy in the world. I can teach you everything I know about trading, but eventually, the skill itself, you have to develop by yourself by putting in the hard work, right? Because eventually you have to press the button.
Yeah.
I'm not pressing the button for you.
Yeah.
And when it comes to pressing the button, people do stupid things. They move stop losses. Maybe they're scared to enter as well. They risk more that they can cope with, and all these things we all know about, right? So eventually, pressing the button, you have to do yourself. And this is basically where people fail.
Yeah. So what does building the skill look like for you? Is it back testing? Is it replay? Like some people use softwares to replay the bars to help train their mind to see the charts. Is it just marking up the charts, showing up every day?
Yeah. I mean, right now I'm
in the past.
I'm not building skill anymore, I would say, right? I'm just building more mental and psychological stability.
Mental and psychological stability.
Yes,
that's forever.
That's
right?
forever, because
that's perpetual.
Trading is never stagnant, because you slowly increase your funds. By increasing your funds, you also increase your risk. And by increasing your risk, it's a different stress on you mentally,
Yeah.
right? Trading $100 risk versus $10,000 risk is a different game, right?
Yeah.
And you have to get there slowly,
Yeah.
right? And having $10,000 risk per trade versus $50,000 risk per trade is also different stress on you mentally, right? You have to get to there slowly as well. So this is what you have to build like throughout your whole life, right? But building like the, let's call it quote unquote technical skill, back then it was just showing up every day and observing the charts, right? Again, I can only stress, I think there was not one single day, also not during the weekends, where I didn't just open my trade station and check my charts and do some, just, drawing lines, checking if there are any patterns in the market, right? Just observing the market move. And this is basically then how you, on top of everything else, the mentoring, the learning, the theory, and just like showing up every day and doing your thing, right?
You're like a mental athlete.
Yeah, this is
right. So you said even the weekends you're looking at charts.
There's no secret tool that you can use that is online that builds skills that builds skill faster, right?
Yeah. Let's talk about your trading style a little bit.
Yes.
Now, right? So what trading style like fits you the most? Like are you scalper, intraday, swing trader?
Let's not talk about scalping yet. I have my own opinion about that, but we can maybe push this to the end or so. But let's focus on what I'm doing, right? So I think the public would refer it as swing trading. We call it weekly income, right? Where my execution time frame usually is a daily chart. So, but I have a two-step process, a two-step mechanical process. So I look at the first step is basically getting biased into a market. So let's assume I'm looking at the Dow Jones in futures at YM or the US 30 in CFD language, right? So I look at three fundamental values first, right? We can get into the details later there as well if we want to and if we have time, but I'm looking at three fundamental values as well that we develop proprietary indicators, right? These are three proprietary indicators that I look at that are derived from fundamentals. They give me a bias whether I'm bullish on US 30, bearish on US 30, or neutral.
Yeah.
If I'm neutral, I don't care about the market at this stage. If I'm bullish or bearish, I'm going to step 2. And then I time the market, right? Market timing. Because with fundamentals, you cannot time the market, right? But you can get biased into one direction or in a potential turn in price. You can add your probability for an outcome. And then you go to step 2, where I then time the market. Then I use obviously technicals to time the market, which I like supply and demand, but sometimes also add a little bit of sprinkle in price action and stuff like that. But it's like then timing the market, where I place my timing the market, aka place my set, entry, stop loss, target. I use mostly supply and demand and like some little bit of price action.
Yeah, I like that. So I think this two-step process is very interesting to me because when I first started, I jumped to step 2. I remember I was trading GBP NZD and I was getting beat to death. I'm taking buys against a downtrend and it's just consistently downtrending and I'm looking for double bottoms, when I look back at it, the pound across all currency crosses, it was on a downtrend just because of fundamentals, right? What was going on with the UK, that first step, I think a lot of traders are missing that bias, the narrative, understanding that. Can you talk a little bit more about that? How did you start to trade like that?
You don't come up with all these things by yourself, right? You get exposed to it, right? Some ideas, and then you basically develop on top of these ideas, and then you build on top, right? Basically.
I think a lot of traders are intimidated by fundamentals.
Because the problem is with fundamentals, in general, right? They're not objective. In trading, to be successful, to be right, first of all, you have to be objective. And then you can become consistent. And then you can become consistently profitable. But first and foremost, you have to be objective because everything else will fall apart if you're not objective. So fundamentals by nature. Let's take earning report. An earnings report is never objective. It's subjective to the one who is reading that earning report. It can be super positive for you, but for somebody else it's like mediocre. For somebody else, for some investment firms, it's like super negative for whatever reason, right? And we don't know the reason, but these reports, whatever comes out, even sometimes interest rates can be, right? We have seen price going up and down and being really volatile, erratic, price movement very erratic, because what plays a role here is the perception of people, right? So what you have to make sure is, if you add fundamentals into your strategy, that you can somehow plot them on the chart and you make them visible, objective.
Very interesting.
And once they become objective, you can incorporate them into your strategy. Otherwise, I would never recommend to use fundamentals because they are subjective in its nature. Right?
Wow, that's amazing. So you've developed a tool that's made fundamentals objective
Yes.
in some way, right?
In some way, yes.
Okay, that's interesting. And people can take advantage of it by joining your...
Yes, but exactly. And I'm showcasing, just especially right now in these YouTube challenge documentaries, where I elaborate on why I take trades, and most of them because of the fundamentals, right? All of them played out nicely because of the fundamentals, and I explain that also in these YouTube videos. So yes, they can just watch it, and yes,
without giving too much away of the proprietary tool, how do you make fundamentals objective?
Yes, then I would give
okay.
too much.
No problem.
But it's proprietary. So
no problem.
But basically, so how it works in general, like, I'm not a coder, right? I cannot code algorithms, right? But we have people that coding this stuff. So we elaborate on an idea, we come up with an idea and see if it's possible to get into into a coding language. In this case, they're coded in TradeStation Easy language. It's called that coding language. They're coded in that way, and it pulls certain data, because everything needs to pull data, right? You cannot just create an algorithm without data. So it pulls data, and then it creates that kind of
visualizes it on the
bias.
chart.
Yes, and visualizes it, can plot on.
Beautiful. That's beautiful. I'm trying to build my own tools and like indicators, it's a tool, but people may think of indicators, right? But something that is that visualizes some sort of signal for me, just for my own particular strategy.
Makes sense. If I can jump in here, the term indicator, I'm not a fan of. Because indicators, what people refer to indicators are, the conventional wisdom, stochastics, RSI, Bollinger Bands, moving averages. So if all these tools were so great, why are so many people losing money, right? I'm trying to use just common sense. If they work so beautifully, why is everyone struggling and not just sitting on a beach trading, right?
Exactly.
Taking this approach, use common sense. So, and indicators are lagging, right? Why are they lagging? They're derived from price. So price has to move first for this indicator to move as well. So you're always late to the party.
Yeah.
You get my point?
Absolutely.
Yeah, so that's why we call this either forecasting tools that we are using or hybrid AI.
Okay, I like that. So when you say forecasting, you're using past data to forecast the potential of a move.
Yes.
Okay. And then
fundamental data, not price.
Yes,
because also
past fundamental data.
Because it's important. What drives the market? Price can never drive price. That's a misconception.
Big misconception.
Price cannot drive price. It's fundamentally wrong. Fundamentals drive price. And then you go into market timing, and then you can time with technicals, because you have to be precise.
So for the people that argue that fundamentals are BS, they say that fundamentals are BS. There's maybe we know that there are algorithms that are running, that these big institutions are running algorithms. So they say the fundamentals have nothing to do with it. These algorithms are running regardless of fundamentals. What would you say to that?
It's obviously nonsense. Look just at interest rates, right? Of course, they have an impact if the market goes up or crashes, like the US stock market, right? The equity indices, interest rates play an important role, right? So one of our tools is derived from the interest rates, the treasury bonds, right? These are all correlated markets. One affects the other. And that's why I always say you cannot only trade one market. Well, you can trade a handful of markets, but you have to be an expert of the financial market as a whole.
As a whole,
because
yeah.
everything impacts each other.
Yeah. So on that piece, you said trading one market or a handful. Yeah. So there are some that argue one time frame, one instrument, and that's it.
Well, I would call this, sorry for my language, BS. Complete BS. Again, I've never seen in my entire career a successful trader who says I trade one market, one time frame. Because again, you have to become an expert in the financial market. The correlations, right? The cross-market correlations, very important, right? Yeah. Treasury bonds versus the stock market, for instance, right? If we stay in that field, because it's really interesting, right? The stock market, what's about to happen next, and the equity indices, because a lot of people might be interested in that as well. So what affects the stock market, and so on and so forth. If you don't understand that, you cannot become consistent.
Okay, so you're trading whatever is in play.
Whatever is in play.
Right.
Yes.
Whatever opportunities are there, you're trading it. Yes. So during your 175K with FTMO, you traded different instruments, whatever was in play, or was it like a handful of instruments at that time?
Well, whatever was in play, but during that time, I was like equity indices, commodities, gold, I think, and stocks. I like still to trade stocks. And nowadays, right, you can trade CFD stocks. And I still see people avoiding that because they don't know a lot about stocks. I feel like, I don't know why that is. I still didn't figure out why people are so drawn into FX. Like when I say FX, like currencies. Right? Because ultimately CFDs, they fall under the umbrella of FX as well because you trade them. So let's say currencies, they are so drawn into currency pairs, especially these cross pairs you were mentioning. You were trading some British pound, New Zealand. These are the worst.
Yeah.
These are the worst.
Why so? Why are they the worst?
First of all, these cross pairs, they are derived from the major pairs. So if you trade, as you said, right, if you trade British pound, New Zealand dollar, you have to look at the relative strength theory, meaning you have to look what the major pairs are doing, because it's just derived from British pound US dollar versus New Zealand US dollar versus their major pairs. And the British pound New Zealand dollars moves accordingly, right? Yeah. It's like you add an additional layer. Why would you do that?
Right. So you have to be looking at both economies.
Exactly.
The US economy.
Actually, you have to look at
UK,
British pound,
US dollar, and the New Zealand.
Actually, you have to look. Ideally, you have to understand what the British pound US dollar is doing, what New Zealand US dollar is doing, what the US dollar index is doing, and maybe at the correlation Euro US dollar, because it's just like, right, the US dollar, it's just an index.
They're so correlated together.
Exactly, yeah.
So you have to keep up with all those economies.
Yes, that's why I personally don't trade. The only thing I don't trade is cross pairs because I couldn't care less.
With the stocks or indices, equity indices, right? You're watching interest rates, the U.S. economy,
exactly,
mainly, right? And the Treasury bonds, right?
Treasury bonds, interest rates, and market cycles.
And market cycles, right? Yes. So what about people that say that one instrument has its own characteristics, right?
They might have, but they fall under the same principles of fundamentals at the end of the day, right? So with that set of tools that I'm using, right, you just... you can trade all of them basically, right?
Yeah.
For some of them, let's say we call it smart money index, which is derived from some data from the futures market, right? And in the futures market, there's 3 parties involved. You have the producers, which is the smart money, you have the hedge funds, which are the trend followers, and then you have the retail money, which is quote unquote the dumb money, right? And you can, because legally in the futures market, all these parties, right, they have to report this data, COT board, right? You know, you're aware of that, right? So we call that, and we derived some indicator for that. Let's call it now indicator for the audience, which we call smart money index. So we know what the dumb money is doing, the smart money is doing, etc. Right? So that smart money index, for some markets, it's more relevant than for others. Like for commodities, it's super relevant and it works like a charm. Versus the equity indices, there the market cycle and the valuation versus the treasury bonds, interest rates is more relevant. So yes, they have their own kind of life cycle or their own they behave differently, and you can focus on what is more important to one market than another, but ultimately you use like all of this information to come to a bias.
Yeah. So
this makes sense.
No, it makes a lot of sense. So once you have the fundamental bias, then it comes down to price action. How's your execution? Like at time of execution, what are you doing? You know,
all my trades are pre-planned, much in advance.
Yeah.
So let's say now coming back to it's a good example, coming back to the US equities, right? The US 30. So right now, if I look at the fundamentals, I know the market cycle. We are in a pre-election cycle, meaning the market might bottom between. So we are now, it's 25th of October, right? You said the podcast is coming out somewhere in November. Yeah. So when the audience will hear that, I'm long the Dow Jones. I can say that already. Okay. Yeah. So, but now today is the 25th of October. Okay. So the market might bottom in the next, let's say, 1 to 2 weeks. All right. Because of market cycle, valuation, and so on and so forth.
Yeah.
So I'm structured already where I haven't set the trade yet because it's too much in advance, but I could potentially now set the trade where price will eventually go. If price will go there, we don't know, right? But where it's like, for me, based on my tools, based on my experience, based on my skills, it's very likely to go there, right? And I could now, execution daily time frame, place that trade and don't look back.
I got you, right. Yeah. So you have that overall bias, that overall narrative.
Yes.
So you mentioned weekly income.
Yes.
Right. So
exactly.
What people would call
swing
trading. Why do you swing trade over the other types of trading?
I find it, for me, so I started to learn in day trading, right? And I think it's also quite important that people get exposure to the market and see how price moves, and so starting to learn day trading, so not to misunderstand scalping with day trading. All right. So scalping is, we just put scalping in brackets because that 1 minute to 3 minute time frame is all BS nonsense. All right. So when I say day trading, it's like maybe 60-minute time frame execution, 120 to 40 minutes. Right. So between that, this would be day trading. So I think it's important in the very beginning that you get exposed to this as well if you're new, because you learn a little bit more about price action quicker.
Yeah, right? You have more to observe.
More to observe versus now me waiting for the Dow Jones another week, right? Or so, right? Yeah. To get filled, right? You want to have a learning experience, not just sitting and waiting, right? But once you're skilled, it's a different story. Now, coming back to your question, first of all, that's swing trading is way more practical, right? It's, when it comes to trading, it's never about, also what people misunderstand that, and I find this still, I don't know why, that people say, I have to take more trades to make more money. That's quite nonsense. It's never about quantity in trading, it's about quality, right? And once you're consistent, what you do, you just, you scale.
Yeah.
You get more funds, right?
Yeah.
You take more, not necessarily more percentage risk, but you can stick to 1%, but you need more funds, right? This is how you scale. You don't scale by taking more trades or taking a different approach to your trading plan. No, right? Because quantity makes you, I don't know if you share that experience, the more trades you take, the more stupid trades you do and take, and the more mistakes you make, and you cannot find so many high quality trades out there. It doesn't, right?
Yeah, that's a good point. That's a good point. So I have a concept that I teach is the playbook, right? And I have the concept of the A+ setup or A setups, right? So
makes sense,
most of the time, like I have a documentary as well, a docuseries, and I only take maybe about 4 trades to pass the challenge. But I'm waiting, people see there's time between, maybe a few days between each trade, right?
So you're waiting for high quality.
I'm waiting for the high quality, right? So question for you. You are spreading your high quality across different markets.
All markets except cross-pairs.
That's how you are able, except the cross-pairs. Which you said are dumb, right? Yeah. But that's how you also are able to take more opportunities, right?
That's where I find
so if you're only trading US 30, like I was in the beginning, I learned discipline and learned how to wait for A setups with only US 30. But I realized that I needed to broaden up my opportunity. So I started to take A setups with more markets. Like maybe I'll trade gold, maybe I'll trade other instruments. If you trade one and you have your A setups, maybe don't just start to take stupid trades on that one instrument that you're trading. Maybe look at some other instruments. Take your show on the road.
I also think that your rules that you're trading, if they're good rules, right? If these rules make sense, technically, fundamentally, whatever, if they make sense, they should be applicable to all markets.
Yeah. Do your rules ever lose edge?
No, we had this discussion already yesterday a little bit. No, because this would mean that the way how the market works, the market mechanics change 180 degrees. The market, since it's existent, works the same way, right? The mechanics of the market never change. So if they lost edge, the market would change fundamentally. The market, we would have much bigger problems if the market all of a sudden changes and, vanishes or whatever happens. The world would go down. It would be Armageddon, right?
Yeah.
So that's why market mechanics never change, right?
Okay. And is that because your rules are based on your bias starts with fundamentals? Yes. So when I hear, you've been in the game for 10 plus years. Like when people say the market changes, do you see any like differences in how the market moves? Like I traded US 30 for maybe about 3 years now. I can see it's choppy at some time. I can see we're on like COVID came, massive drop, and then a huge bullish run after that, right? So you do see those types of things, right? Though, right? Depending on what's happening. Yeah. So when you say it doesn't change, what do you mean by, the market doesn't change?
So let's first let's go back quickly because I said why people should get into day trading, okay? Yeah. But why swing trade? Why I prefer
yeah.
I think I haven't finished that yet.
Okay, let's do it.
People might ask, why is now swing trading better than It's way more practical in general, right? In the sense of it kind of fits to the people's lifestyle because everyone is busy. Right? Everyone has a job. Everyone has family. Everyone has social obligations, right? Doing day trading by its nature is like literally running almost a physical business because you have to show up every single day during a particular time, right? Yeah. And this is not feasible and not practical for a lot of people out there, for most people out there, right? I mean, you must agree with that. So you have to do something that is, because not everyone will do full-time trading at some point of time, right? This is also a misconception that people say, only if you're a full-time trader, you're a good trader. This doesn't make sense. Some people, they are super happy with their job. They just want to have a side income, a plan B. It doesn't mean you're a trader and eventually the end goal is full-time trading. No, some people are having businesses, their own business, physical business, whatever it is. They love their job. They're in their job. They're like experts in their jobs. They're doctors, right? In our school, we have a dentist. And so like, that's their passion as well. They just want they just want to have a side income on top, right? So that's just to make this clear as well. And the best way and the best practical way for people to make a side income is definitely swing trading, right? And also for me, because I have my own business, our licensed investment consultancy, and I also nowadays I don't want to be stuck in front of the screen, right? So so I can have more, we call it the 1 hour a day mindset. It's just like, it's not literally speaking 1 hour a day, right? But it's just like being not glued to the screen and also not being at the screen at a fixed time. You can always place your trades, as I just mentioned, that US 30 trade, right? I could place now, I could place tomorrow, whenever it comes into fruition. I'm not the screen doesn't dictate when I'm in front, when I have to be in front of it. So it's way more flexibility, more freedom. Yeah,
I think some people think that swing trading, you have less opportunity, but
again, it comes back to you take only, how you would say it, A+ quality setups, and if you want to make money, and again, please to the entire audience, if you want to make more money, you have to scale up your business. That's how business, that's how business works. If you want to make more money, scale up your business. Scale the business. Get a different branch, right?
Open up another branch.
Hire more people, right? But here, if you want to make more money in trading, the only variable you have to change is the funds. And with prop firms coming into play, then you do another, if you're at 200K and you're doing well, don't change anything. Just add more funds on top, but just continue with your trading. You know what I mean? That's like, for me, like a major rule.
Yeah.
So I wanted to really stress that.
I have to ask you about scalping because we have a lot of people that love scalping.
Let's get controversial.
Yeah. So tell me, we have a lot of people that like scalping, right?
Yeah.
But you 10 years in the game again, so you're seasoned, right? Yeah. So tell me your opinion of scalping.
I also, in some of my videos, I bash a little bit of scalping, and to all scalpers, don't take this personal, right? Don't take this personal. But somehow it feels like in my comment section, they take it personal. But that's somehow the nature of scalpers. A swing trader would never take it personal. A scalper takes it personal. Anyway, I just wanted to get this out of my chest. No, it's just also, I doubt really, and somebody has to prove me wrong and show me wrong, that you can scalp $50 risk, you can scalp $100 risk, you can maybe scalp a couple of $100 risk. Somebody has to show me just once that he can scalp $10,000, $20,000, $30,000, $40,000. Big capital can scalp that consistently profitable, and also cope with that mental pressure that comes with that. Just try to lose $10,000 while you place a trade on a 1 minute chart. You go to the restroom to pee and then come back and then you lost 10K. Show me that somebody can do this consistently to take this mental pressure. It's just nonsense. Especially also, like, this is just the mental side of it that I firmly believe, and I've never seen and met anyone who can prove me. Everyone is saying, I know, but I know someone. You know, like you hear that a lot. Yeah. I know someone who knows someone who is profitable. Like, who cares, right?
So the mental pressure, that's a lot of mental pressure.
That's a lot of mental pressure. And on top, the market itself, the lower you go in time frame, the more erratic the market behaves, and the more prone the market is to behave on news event, right? But the higher you go in time frame, the more predictable the market also becomes, right? It's fun, you know, and I have to say, when I started off, I also sometimes looked at 2 minute charts just for the I get it, it's exciting, and if you place a trade and it works out and you made money like within 2 minutes, you feel good. But nobody can tell me that they're consistently profitable with big capital in this time frame. And then, you know, also trading on MT4, MT5 and doing all this stuff on the mobile, right? It's just like, but that's more it's marketing, and the people out there, they like the notion of quick money, quick painless money that doesn't require patience, and you're maybe taking a 2 minute trade and then you're done for the day. That's just a notion that people are naturally drawn towards, but again, that's not real trading.
So you say it's not real trading.
I call it gambling.
You call it gambling.
Let's be fully honest.
Man, that's a really interesting take. Yeah.
But again, somebody has to prove me otherwise.
Yeah.
Right? So far, nobody proved me ever otherwise.
So
and
I
have a lot of experience. I'm not the one who has like 1-2 years experience and say, but I know someone. No,
you know, I like these types of dialogues because it shows the different perspectives, you know, and that's one of the reasons why I reached out to you, is because there's certain groups that dominate like YouTube space, that dominate the social media space. Some bash fundamentals. They say, you know, I don't use fundamentals at all. Fundamentals are trash. Swing trading is not profitable. You know, so you hear people talk about different styles, right?
Problem though, right? It's when you say the social media space is dominated by X, Y, Z, right?
Yeah.
The YouTube space. You have to question if that YouTube space and the social media space is all real.
Like who's there? Exactly.
Who's there, right?
So that's why I brought you, so that I can share different perspectives on the podcast, you know, so people can hear different perspectives and just know that there are different ways to make money.
Yeah,
you know,
that's for sure.
Yeah.
There's no holy grail, and there are different ways to make money 100%. But there are some rules to follow to become consistent, and you cannot deviate from that.
And you can't deviate from those, right? Yeah. So there are 3 traders that are listening to the podcast. And this is all based around like prop firms, right? Because we've been dedicated to helping undercapitalized traders increase their capital, as you mentioned, scaling the business, right? Because they want to make more money. So we preach A+ setups and scaling the capital.
Yes.
Rather than trying to take more setups, right?
Yes.
There are three. One is undecided about prop firms, right? What would be your message to them about, the value of using a prop firm, or when they should actually start with prop firms?
In general, I would say nowadays you can get into prop trading almost from the get-go. Just like you don't have to buy a 200K challenge, right? If you can barely afford it. Once you start off trading and you start off taking your first few demo trades, you can also do that in the smallest prop firm challenge. Like, I don't know, buy the 20K, 10K, 25K challenge that costs you $50 just to get into the mode of prop trading, of the challenge mode of trading, because in the challenge you might trade a little bit differently, as I explained, as opposed to trading then your real funds once you are funded, right?
Yeah.
The one-to-one risk-to-reward ratios, right? In the real environment, you would maybe play these trades out to a 1-2, 1-3, 1-4, whatever your real target would be. So just to get into that challenge mode right from the get-go, and instead of trading demo, buy a small challenge, so it feels a little bit challenging, right?
Yeah,
It feels like competitive, challenging, because it's I feel like it's almost like the school system. It's like there's only pass and fail. It's like an exam. Right? It's like your driver's license, right? So if you pass that, it means you are somehow skilled, quote unquote, right? I mean, I'm aware that a lot of people they pass a challenge and they miss their first payout because they might have passed it by luck, or they used some dodgy dodgy tools or companies who pass it for them, right? That all exists in that world. But it gives you an indication if you're on the right way. Because I've also been approached by a lot of people who show me that they have failed 10, 20 plus challenges and they just cannot make it, right? Which means, hey, you are not able to pass your driver's license, then don't go out there and drive a car, because eventually you will crash it. So metaphorically speaking, it means if you traded your own funds, you have proof that you shouldn't trade your own funds, because you eventually will wipe out your account.
So what should they do, those that are struggling to pass prop firms?
They should get proper education, right? It's common sense, right? Go to your driving school and get driving lessons, right? If you continuously fail the driving exam, right? It's like, that's why I like prop firms so much, because it gives you kind of really that kind of passed and failed certificate that is like your license to do something.
A lot of people, they complain about the rules, but I believe that professional firms have similar rules. There are drawdown limits.
The rules are great. They're amazing. It keeps you on the edge. It makes you, otherwise, I mean, you have to follow a proper money management and risk management regime, right? I mean, you have to follow these rules, and they make you follow these rules. They are great. Yeah.
So I've noticed something amongst successful prop firm traders. There may be complaints about limitations after they make a certain amount of money. But in general, I see the most successful, they're able to trade around or within the parameters, But I see a lot of people that are failing, they blame the rules. They blame this person or that person.
It's crazy. I see that as well now on social media, since I'm now more exposed in the social media world. Well, everything boils down to accountability, right? They're not accountable to themselves. They blame, as you said, they blame everything but their skills, right?
They blame everything but their skills. Wow, that's powerful. So they need to work on the skills, as you mentioned.
100%.
They need to go back to driving school. Okay. Now,
a prop firm, by its nature, doesn't make you a better trader, but also doesn't make you a worse trader, right? It reflects your skills.
It reflects your skills, full stop. What about the trader who wants to go from good to great? Maybe they have a prop firm account, 100K, 50K. How do they make a transition to larger capital?
This person is already good.
Okay.
Right? And doesn't have too many bad habits. We all have bad habits. I have bad habits. We all have bad habits, right? That we are working on. Our inner demon, right? We all have that. But let's assume this person is good. It has like a foundation where he or she, they can make consistent income, but sometimes like struggling a little bit. It really boils down to experience and then the right experience. But yeah, this person is already good. So yeah, just continue working on your graph, right? And show up, right? You have to show up, right?
When does a person scale up? When they get more accounts? Like, how does that look like in a concrete manner, tangible manner?
Yes, I've actually made a good video about that on YouTube.
Okay.
It's called The First 100K with Prop Firm, something like that, along the line. We call it internally, milestone planning.
Okay, milestone
Right?
planning.
Milestone planning. Just make a simple example, not to drag this too long. Let's assume you're trading a 100K account with 1% risk, right? And you're able to get three consecutive, I would rather say three consecutive payouts, by its nature, all kind of similar, right? And all traded with the same set of rules, like you can see consistency, then you start scaling up. But you have to have that base, because we have to get used to bigger numbers slowly as well. Because now, let's assume I'm trading a 100K account with 1% means you have $1,000 risk per trade, right? Now it's a different ball game whether you trade with $2,000 risk per trade or $1,000. It's mentally just different, right? It's really different. I mean, I'm not sure about your experience about scaling and feeling different risk pressure, but for me, at some point of time, I remember back in the days, getting to $1,000 of risk was a big step. Like that, that 4-digit really was like somehow hard to overcome.
Yeah, I remember that.
And then every time, I also remember that every time when I saw on my P&L also a 4-digit, I was getting like my heart. I felt like I'm feeling pressure, and every retracement back, right? I was like, oh, should I press close manually because I want to keep that 4-digit? It was at this time was huge for me,
Yeah.
And so what I'm saying is basically that people have to slowly get used to these bigger numbers until they are getting more numb to these numbers, right?
To become more numb to the numbers.
Yeah, exactly, right?
Yeah.
Where you don't feel any mental pressure, all right? And this is where you then, with a 100K account, I have 2-3 consecutive good payouts. Let's move now to 200K or 300K account. And let's do the same milestone planning. See if it works, right? And then you move to, to next. So you cannot move from a 100K to $1 million account. Doesn't work.
Like, how much capital you have under management now? How's that going for you?
So right now it's 3 million. So it's 1 million with VST, 1 million with Search Trader, 400K FTMO, 400K True Forex funds, and 200K with Funded Next. So it's in total 3 million. So I just recently passed the 400K True Forex funds. I'm now releasing the documentary. So the Funded Next and the True Forex funds, I did this challenge documentary where I recorded my progress every single day, the screen basically. It's on my channel. And this is where I just recently passed. So it's now in total from 2.43 million, right? And I would say the sky is the limit.
That's amazing. That's an amazing target. So just one last question.
Yes.
Or is there anything else you want to share with the audience, just in general, that we haven't talked about?
I think when it comes to, I think a lot of newer traders going to watch the podcast, not so much experienced traders, right? They're kind of new to the game or kind of still struggling, right? Because trading content, right? So because you're still looking to find a solution for your problems, which is the skill,
for the pain,
the pain, right? Exactly. So use common sense. Use common sense. What sounds too good to be true usually is too good to be true, right? It still needs, when somebody's promising you, I always say, hey, people who are promising you a 3-day course, 7-day course, and then you become in 7 days a profitable trader. This is as scammy as beep, right? Right? It's trading in general, trading education is a process. It's not an event, right? So that's why courses in general, there's a problem with the course because it has a beginning and and an end. So after that, what are you going to do? You're left alone, right? You might get some theory, some knowledge, but definitely not a skill. There's a big differentiation between knowledge and skill. You can read a book in and out, right, about parachuting, how to jump from an airplane, but you don't have the skill to jump from that and actually use the parachute, right? Just to metaphorically speaking. So just use a little bit of common sense if you're out there and looking for reasonable education. Look for common sense. Just understand that it takes time. It's a marathon and not a sprint. I know it's very cliche and you might have heard that, but that's just the case. That's how it is. It's just like running a business.
Yeah.
So just, use a little bit of common sense when somebody is.
So as an educator, how long should a trader look at, like, to be from start to consistently profitable?
That's a really difficult question, and there's, again, no one size fits all answer to that. And there's, if I told you it takes X amount of time, I would be a liar, because I don't know, right? It really depends, how much time you can afford and how much time you can, out of all your obligations that you have throughout the day, throughout your week, how much time you can actually allocate for your trading, right? But to be really honest, for somebody to see consistency, like let's say 12 months, if this person does everything right, and spends also effort, but 12 months is no time in trading.
No,
12 months is nothing.
It's nothing.
12 months
in
is nothing
any
in business, in any profession.
That's right.
Yes, like you have to. That's why people coming to me after 3 months, I'm not making progress. I don't get that. I don't get that, because they are starting with the wrong mindset.
So last question.
Yes.
This is more of a fun question.
Yes.
So if we could go 10 years ahead.
Yes.
Right. 2033.
2030.
What would Bernd of 10 years ahead tell the Bernd now?
I have no idea. Follow your instincts. That's what I do ever since. Right. I don't have a long-term plan. I never had a long-term plan. As I said in the beginning, I never knew what I want to do with my life. Right. And then I all of a sudden I became a trader, full-time trader. I'm now a prop trader. I have a licensed investment consultancy. Who knows where I am in 10 years? But don't limit yourself. Do what feels right. I do a lot by intuition, what makes sense. I use a lot of common sense, right? I'm definitely not the smartest person in the room. Never was, right? But I use a lot of common sense. I think I'm rather smart and intelligent. It's a huge difference. So I follow my intuition, and I'm true to, very authentic and true to myself. And let's see where I am in 10 years. So far, knock on wood, everything went well. Yeah.
Well, thanks for joining the show,
Again,
Bernd.
thank you so much for having me. It's my pleasure. I was really honored.
Yeah. So where can people find you? Like Instagram. You have Instagram.
Well, I have Instagram. My name, I know how to spell and how to pronounce, Bernd Skorupinski, but for sure you're gonna show it somewhere.
Put it in the description.
Put it in the description, right? And also on onlinetradingcampus.com. That's our licensed investment consultancy that basically focuses on trading education.
Definitely watch the YouTube.
Now YouTube, yes, I'm now in the YouTube game. It's a different game. It's a different animal. I'm still getting used to it. I'm learning, and I think this is where I can learn from someone like you as well, like the social media game where you're much more advanced. But yes, I'm getting into that as well.
It's been a great show. I've learned a lot, and I'm sure the audience learned a lot. So thanks for being my second guest, and we'll talk later.
Thank you.